Hey guys, welcome back to our weekend trading edge video. As always, I'm your host, Akil Stoked. If you guys are brand new to the channel, I'm a Forex trader. I'm also a trading coach over at tier1trading.com. And this is a weekly video that I've been doing for I don't know how many years, maybe a decade now, showing you what's on my radar for the week ahead. We've been coming off a hell of a heater in the market, and hopefully I can share with you a few more opportunities that can allow us to keep that hot streak going as we get to the end of the year, or at least towards the end of my trading year, which is wrapping up pretty soon. Now, before we get started into the technicals, I want to touch a little bit on the fundamentals because I've been getting a lot of questions and having a lot of conversations about this and the fact that we're at an interesting point in kind of the economic cycle right now where we've been going through this rate hiking cycle in the US and many other countries as well. And we had a lot of news come out this past week, and the market's reading that news with anticipation of when are we going to start going down the mountain. So you can imagine rate hikes as being us climbing up a mountain. Usually we plateau and go a little sideways where we keep rates steady for a little bit, and then the markets kind of get quote unquote normal. And then we go into this rate hiking cycle. Well, things have been kind of weird for the last, I don't know how many years, ever since COVID, where it feels like we're going to go directly from a rate hiking cycle to a rate cutting cycle. And the market is paying very close attention to what's being said and trying to anticipate when that may be. And we're going to see that later when we look at gold and why gold is at a very interesting location. But in general, when you think about stuff like that, if you were to follow kind of quote unquote the rules, right, a rate hiking or cutting cycle would mean dollar weakness. That would mean gold strength. Again, doesn't mean you want to use this if you're a chartist, a technical trader. But when we talk about those quote unquote home run trades in the market where we're combining fundamentals and technicals, information like that can be can be helpful. So we're going to start here on the euro dollar. Euro dollar has an interesting setting up, and I'll give you kind of two ways to look at this from a bullish and a bearish perspective. One, we're coming off of a classic pattern formation called a rising channel, right? This is a loss of momentum pattern. We see a high momentum move. You know, look at the slope and the range of this candle going straight up in a very quick way, so not taking a lot of time to move this many pips. And then we kind of continue to trend higher, but you can see the action is a little bit different. Instead of going straight up, it's more of a ebb and flow. The candles are smaller, the range is getting kind of smaller, and we can pair that up with divergence as well. We look at our indicator down here, and in this case it's the relative strength index, and we can see that although we're putting in higher highs here on our price chart, we're actually putting in equal and then lower highs here on our indicator. And this is typically followed up by a sign of relief, and you can see as we ended the week, that's exactly what we got, a little bit of relief, these red candles. Now the clue that stands out for me is this: as we got this relief, we came to the beginning stages of our rising channel, and this is where we typically anticipate price action going, or I should say because I can't speak for all of you guys. Everyone does something a little bit different in the market, but I typically anticipate a move to the beginning of the pattern formation, and we got that, which would, I would see that as like the completion point. We also got a very interesting candlestick clue in the form of this red candle right here. Now, although this is a red candle, which technically means it is bearish, so price closed the session, the daily session, lower than it opened the session, I actually see this as more of a bullish move, or in this case, a little bit more neutral move because of the wicks. Right, the wick to the downside shows me that price, or the sellers, pushed price all the way down here, testing the lows of this area, but they were unable to hold, and price ended up closing a little bit higher. And that's going to be because of a combination of two things, right? There are going to be sellers that made a lot of bank going from here to here that are taking profit. In order to take profit, if you're a seller, you need to be a buyer, right? There's going to be less interested sellers because, again, we're coming down to what myself and many other technicians anticipate being the ending point of this pattern. And then three, there we go. There's going to be buyers interested at this level, right? Buyers that maybe missed this initial move, saying, it's too expensive. I don't want to buy now because it's too late. But if we come back to this level at a cheaper price, then I'm interested in buying again, right? So 3 reasons that we're seeing this type of movement here. Now, how this helps us as a trader is this can be the next area, if you're anticipating longs, this can be the next area in which you're looking to buy, looking for a retest of the highs and a continuation above. And especially if you have that fundamental bias, that fundamental backing that we're going to see dollar weakness for the foreseeable future, this is on the right side of the market where you're betting on the euro, which is not necessarily a good thing either, but betting on the euro in the way of having more strength against the dollar. So you can look for a nice continuation trade there. Going down to the 4 hour, something I would do for confirmation is, again, we got a nice little candle here. Would have been a good sign if we closed with a higher high, higher close, meaning this red candle broke and closed above this white one. We did not. But if we can clear this level right here, I would then anticipate a move up to retest previous structure. Now, on the other hand, if we break to the downside, we're looking for the exact opposite. So if you're a bearish trader, here's what I would look for. You see the low of this candle right here? Right there. Yep. If we can violate that level, again, break and close below, I would anticipate a move back down to this zone right here, the area right before this big elephant candle, the massive white candle on your screen. Yes, I have Christmas colors. Don't judge me. It's December, right? But I would anticipate a move back down to this area if we can break here. So if you're someone that's looking for a bearish trade, wait for the violation of 108.25s, and then you can look for a continuation move back down to this zone. You're going to have to do your details, and we'll do this later in the week, kind of pinpointing a level in here. But at the very minimum, 107.58s, at the very maximum, 106.54s. Now, earlier I spoke about gold and gold being at a very interesting location. If we pop out to the weekly on gold and we zoom all the way out, you're going to see that we are at a level that we have not been at before, right? Or I guess we've been there before, but we were at the highs that we haven't been for in a long time since 2020, whatever like that. You can see back here in, August 2020, we hit highs and then we kind of retraced a little bit and then we retested them again in March 22, and then we retraced a little bit, broke and closed below, which I thought was going to be a continuation lower. I actually sold some of my gold at this point. And then we tested it again in May 2023, and we're back up there again. Now, this is interesting because there's two ways to play this, right? One way is the counter trend way, meaning you're looking for a selling opportunity. You're seeing the fact that gold has hit this level here and failed to move higher. We've hit this level here and failed to move higher. We hit this level here and failed to move higher. We're hitting this level again. So you can anticipate that, hey, we've tried 1, 2, 3 times and we've failed to move higher. This can be a nice counter trend trading opportunity where, again, just like we spoke about with the euro, we're anticipating some of the buyers taking profit here because they say they see that, hey, we've hit this level 3 times before and haven't broken through. So I'm going to take at least a little bit out and pad my pockets a little bit, and that we see a little bit of selling pressure come in. Now, again, remember, with it being a counter trend move, we're not looking for a massive turnaround. We're looking for just a little bit of relief, right? We're looking for a little bit of a move from here, maybe down here. If you're holding a little bit longer, maybe to the lows down here, but we're not looking for a full out reversal in gold. That's something very important. Something else to pay attention to, however, though, from the other side of it is, looking at our depth of retracements after we've hit the highs. So the first time we hit the highs, we retraced right to this level, right? Then we came up again, and then we actually broke and closed below this level. Again, I told you this was a bearish signal for me. Now, it didn't end up continuing bearish, but it was a bearish signal for me. So whether it did or didn't, the signal is still the same, right? I don't want to base my analysis off what actually happened. I want to base my analysis off of real time. We then retested again and look at the relief, right? Where previously the relief was here, and then it was here. Now it's here, higher relief, right? This is a bullish sign because the sellers weren't able, or the bears weren't able to push it as far back as they were last time. Bulls were able to push it to the highs, excuse me, the highs again. Bears were able to push it only about midway, right? So you can look at this as a bullish signal. So if you're someone that's anticipating that gold is going to go higher, break these highs and continue up, especially with the fundamental kind of landscape that we're in, there's two ways you can look for this. If you are aggressive, you can set yourself up, I guess 3 ways. Well, 2 main ways we'll talk about here. If you're aggressive, start setting yourself up prior to the breakout, right? So set yourself up for a potential breakout. If you're more conservative, wait for the breakout, wait for the confirmation of a break and close above this level, proof that we're likely that the bulls are able to close above that threshold mark, and then look for your reason to get involved afterwards, whether it's waiting for the breakout candle and then buying at market for that breakout, whether it's looking for the breakout and then looking for the pullback and the next opportunity to get high, whatever fits your fancy as a trader. But that's what I would be looking for if you're looking for longs. If you're looking for shorts, just continue to look for confirmation of a rejection at this level, as we've seen in the past 3 times, and then look to ride it down a little bit for another area of relief. DAX is going to be similar. This is one that we looked at earlier in the week. I think I put up a YouTube video on this as well. I put up about 3 short YouTube videos this week. If you haven't seen them, check it out. Make sure you subscribe to the channel. That way you don't miss them. But they've been little short and sweet videos of analysis or great conversations we've been having in a live room. And I think this was one of them where we looked at a buying opportunity here on the DAX. It was a simple trend continuation trade. Well, now we're up to a previous level of structure. And this is the perfect chance to follow up on a question I got the other day. There's going to be a podcast episode, a Trading Coach podcast episode, available on your favorite podcasting app 3 times a week. Rate, review, like, whatever you have to do to support the show. It's one of the top rated trading podcasts out there. I want to be the top rated one. I need your support to do it. So keep up that support. Leave me ratings, leave me reviews, and share it with a friend. But there is a podcast. You love that shameless promo, right? So shameless. There is a podcast episode coming out where we're addressing kind of a question about counter trend trading and is counter trend trading more dangerous or risky and blah, 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 blah. And I think this is a good example of kind of explaining what counter trend trading is, where counter trend trading is not necessarily you going against the grain of the market. I think a lot of people think it's like salmon swimming upriver and stuff like that, where we're battling the trend continuation traders, and I guess in a sense we are. But what we're really looking for is we're looking for common areas in the market. We're looking for areas of exhaustion. So again, in most cases, if you are a trend continuation trader, right, you are looking to buy back here, right? You're buying the dip because it's a cheaper price and you're anticipating that price is going up. Not a lot of trend continuation traders are buying at the very highs, at least not a lot of good ones. Maybe some silly retail traders are, because newer traders do silly things, including myself back in the day, but there's going to be less people interested in buying here, right? So this would be a good area to look for what I call relief. Again, an area where buyers that bought down here, some of them are probably taking profit up here. There's probably another flock of sellers up here as well, because there were sellers in the past and sellers in the past, right? So we're just looking for that area where kind of the momentum shifts. The buyers are leaving, the sellers are entering, and the selling pressure starts to outtake the buying pressure, and we get a little bit of a dip. Now, does that always happen? No, right? Markets break through. That's how extensions happen, and then they continue, right? But the point is, as a counter trend trader, we're looking for levels like this. Now, the key thing is we're looking for clues. We're not just selling right away. We're looking for clues of that exhaustion, and then we're looking to kind of capture a small move down here before ultimately the trend continues, which is what we expect in not necessarily the Forex market, but in most indices and stuff like that. But this is a good example of, you can see price action coming up into a major level of structure. Again, this was a trend continuation trade that we looked at earlier in the week, and this was the level that we said we would take out profits, right? We're looking right in here, and what do we say? We say, hey, if price came to this level, take your money out, or at least take a partial position out as we retest these highs. Again, think like the other trader, the same place that a buyer is looking to maybe take some money out the market, that's where a seller should be looking to get in the market, and vice versa. So I thought this was a good example of that. And again, we're going to have more in this conversation. I didn't schedule the podcast yet, but I got a bunch to do. But I think it's going to come out. What do I have scheduled already? I think I have episode 905 scheduled. Let me just check real quick. I can show you guys, or I can tell you guys. I got episode 903 scheduled, expanding your trading business, how to deal with the risk. So maybe it's going to be 904 or 905, something like that. Ooh, the next one coming out tonight, my continued education project. That's going to tell you about, every year I do continued education around this time. Again, I told you my trading wraps up soon. After that, I take some time to focus on myself. Today's podcast is going to tell you what my educational project is for this year. Dun, 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 right? So make sure you check it out. So anyway, thank you guys for enjoying the video. Make sure you like before you leave. Again, if you're brand new, check me out every week. We do this video on a weekly basis, and I also load up random videos throughout the week. So subscribe to the channel and get your trading knowledge. All right, until next time, plan your trade, trade your plan. Take care.